I'm Taylor Riggs in San Francisco, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, bottom line versus data breaches. Facebook's intentions questioned after leaked court documents emerge. We have details. Plus, travel woes. Shares of online travel company Expedia fall Thursday after the company posts disappointing earnings. We'll hear from the CEO in an exclusive interview. And Disney Magic, the global media giant, beats fourth quarter bottom line estimates. We'll break down the results ahead of Disney's highly anticipated streaming platform debut. But first, to our top story. So Facebook continues to struggle to regain trust over how it handles user data. But that's become more complicated. There has now been a leak of internal documents suggesting business considerations outweighed those privacy concerns. It's something that Facebook publicly touted when it decided 5 years ago to cut off tens of thousands of developers from its platform. To discuss, I am joined by Bloomberg Technology's Sarah Fryer and as well as Bloomberg's Ben Brody in Washington. Sarah, let me start with you. You've covered this story. What do we know from these leaked documents so far?
So the documents give us this really interesting internal picture in a way we really haven't seen before of how these decisions are made and the difference between how they're discussed internally and how the company explains them externally. Internally, they're saying we need to cut off any apps that could potentially be competitive from our services, from our advertising, from our developer tools. Externally, they're going out and saying, we really need to increase the privacy of our platform, and so we don't want these third parties to have access to this data. So it's really interesting looking at these discussions, because one thing that really stands out in these documents is how competitive they thought messaging apps were. And they cut off WeChat, Line, Kakao, 3 Asian messaging apps from using Facebook for advertising. This was just a year before they ended up acquiring WhatsApp for $19 billion. It ended up being $22 billion. That's something that regulators are going to be extremely interested in when they develop their antitrust probes into Facebook.
And to get that regulator perspective, Ben, walk me through how this further complicates Facebook's relationship with DC.
Well, I think Sarah's exactly right. Those sorts of considerations, how did you view messaging apps? How are you evaluating them? Are exactly the kinds of things that the FTC is going to be looking at. We should have a caveat here. You know, you're not obligated to deal with your competitors. And if federal and state antitrust enforcers aren't finding that this company was dominant and was abusing that dominance to perpetuate a monopoly, then there's no case here. But I think that they're going to be looking at these things. I always say antitrust regulators, they're just like us, but with subpoena power. When they read a news story like this and they see these kinds of documents, and some of these documents have in fact leaked out previously before, they ask the same questions that we're asking right now. And so they're going to want to take a look at those. They're going to want to maybe take depositions. And so it's that much more that their lawyers are going to have to say, well, hold on a minute, we can produce some of this, we can't produce other things. You know, and the question is, we saw in California yesterday, they're actually going to court over document protection. Does that create this situation here? Possibly.
Well, Ben, remind us again about that burden of proof, because you could say, to play devil's advocate, you have a right to protect your own business interests. You have a right that we do not want to deal with competitors, that we are a for-profit company and we should be protecting our own interests. What is that burden of proof?
Right, exactly. I mean, spinning is not against the law. The federal antitrust regulators, the Federal Trade Commission, is going to be doing a rigorous economic analysis. What happens when Facebook makes a particular business decision? Where do consumers go? What do competitors do? How much of the market share do they actually have? They're looking at all of these things before they even get into a theory of harm, a case about a particular violation. And it's going to take a long time for them to build those things up. They're going to interview third parties. They're going to look at economic models. They're going to listen to complainers and experts from both sides, lawyers on both sides. It's going to take a long time for that sort of thing to build up, and we don't know necessarily where it's going to go, but I think what this represents is really tantalizing questions for them to look into now.
And Sarah, this is further complicated by the fact that this feels like an anti-competitive, an antitrust issue, but they're also publicly touting data privacy. So this is an antitrust issue, not a data privacy issue, correct?
Well, it's a little bit of both because, as you know, when Facebook cut off developers' access to data from users' friends, they did it only for certain developers. They whitelisted other developers. That's one of the problems at the heart of this lawsuit that got leaked. And so when we see instances like Cambridge Analytica, which is directly a result of these developer relationships and so freely handing out that developer data, how they handled it, when and why is a huge issue with regards to the privacy front, because they don't do that anymore. But as Facebook gets hammered on privacy issues, they are going to become more anti-competitive. As a result, they're going to be in charge of their data and keeping it as close to the chest as possible and not letting other people get a slice of that dominance.
Well, tying it all together for us, it is Bloomberg Technology's Sarah Fryer and Ben Brody. Thank you both for joining us. Now, Expedia shares are plummeting on Thursday after reporting earnings. They're closing down about 27%. Expedia's vacation rental business, Vrbo, saw a decline in revenue growth in the third quarter. Vrbo is the fastest growing category of the travel company and competing with Airbnb and Booking.com. In an exclusive interview, Expedia Group President and CEO Mark Okerstrom discusses his outlook and strategy with Bloomberg's Guy Johnson and Vonnie Quinn. Take a listen.
We did have a difficult quarter, but that said, there's a lot of great things happening around Expedia Group. We had a lot of highlights. Volume from room nights were up 11%. We continue to see great strength on our Expedia Partner Solutions business. We continue to make great efforts on our customer centricity initiatives, and it's starting to show up in our results. We did see our direct channels up more than the overall business, and we got a long runway ahead of us.
Let's talk about what's happening with the short-term rental business. There seems to be a concern that you are struggling to make your message heard on Google. How do you reduce your reliance on Google search?
Well, I think overall, whether it's our alternative accommodations business and Vrbo or our other core OTA brands, a lot of it is around the strategy that we've got in place, which is making sure that we've got great products and services for our customers, that we build loyal customer relationships. We've got incredible loyalty programs. Hotels.com, for example, just hit their 50 millionth loyalty member. Brand Expedia's got a good rewards program. And importantly, it's about delivering incredible products and services for our customers, and that's exactly what we're squarely aimed at doing. Vrbo itself, which is our alternative accommodations brand, as you know, has just relaunched its new brand. They're looking at relaunching or launching that in other regions around the world. And ultimately, we've seen good strength there. The Vrbo brand itself has been up nicely double digits. And again, we're going to continue to move along with our multi-channel strategy that, really isn't a strategy that is solely dependent on Google.
Mark, how much more are you going to spend on marketing, though, with Vrbo? Because it is taking some time to sort of have this rebranding accepted and known by the public, and particularly now with this new challenge of Google putting Hotel Finder above the likes of Vrbo in search. That makes it much more difficult for you. I think the street and investors want to know, when will that happen? How much will it cost for that to happen?
Well, we're going to do it in a balanced way, in which is the way that we've always done it. We have spent against the Vrbo brand in the U.S., both in traditional television, digital. We are seeing good results there, and as we look to roll it out internationally, we're going to continue to do it in a balanced way. But of course, our alternative accommodation strategy isn't just about Vrbo. We have recently brought some of our partner-facing teams closer together. We are now up to 650 alternative accommodations offerings from Vrbo available on our core OTA brands. And so international expansion for us in alternative accommodations is going to be a real combined effort.
That was Expedia CEO Mark Okerstrom. Game makers Activision Blizzard and Take-Two reporting earnings Thursday. Activision reported third quarter earnings that exceeded its prior outlook in both revenue and earnings per share. The World of Warcraft Classic and Call of Duty coming off a dismal year, in part due to a controversial decision to temporarily ban a player for making pro-Hong Kong statements. Take-Two also saw a revenue bump in its most recent quarter. That increase was fueled by recent releases such as Borderlands 3, that's from developer Gearbox Software and publisher 2K, launched in September, and NBA 2K20, which was the best-selling game in September. The maker of Grand Theft Auto also raised its outlook for 2020. And coming up, the future of genealogy and its role in wider healthcare system. That's our conversation with Ancestry President and CEO next. This is Bloomberg. Providing genetic data will empower consumers and improve their health care. That is according to the Ancestry President and CEO Margot Georgiadis. The company has faced criticism about the value of the DNA data they provide, but the CEO says it will advance health care and give providers more information about their patients. She spoke to Bloomberg's Max Chafkin at the Bloomberg Year Ahead event in New York. Take a listen.
What's really going to advance this industry is not a focus on technology or lab reports, but it's really how do we help consumers get to better health outcomes. And so for us, if we can understand actionable genetic risks that can help us get on the path to prevention in meaningful ways in a collaboration with a healthcare provider so that we can live longer, healthier lives, that's where we are really adding value and solving problems. And so that's where we think the future needs to be as we focus on this industry.
So what's the business here, though? Because you know, this is historically these have been, you know, one-off tests, but you know, my understanding is you guys are moving towards, Ancestry is moving towards sort of a subscription model. Why don't you just talk a little bit about that decision?
Absolutely. You know, as I said, we didn't want to be another lab report provider. If we were going to go on this, it needed to live to the standard that we hold ourselves as we empower journeys of personal discovery to enrich lives. So we needed to get people from insights to action. And so we really focused on what consumers want most, and that was 4 things. I want actionable insights. I want access to genetic counseling services. This is new. I know I'm going to have questions. I want support. I want a seamless connection to my physician. So as I move to that action, I want to know that that doctor can understand that and take action. And last, if I'm going on this journey, I want the most comprehensive screening possible. And so for us, that was providing affordable access to next-generation sequencing technology, which provides a much more comprehensive understanding of people's genetic risks.
So next generation, what does that mean, though? Is that like the whole genome, or, you know, put that in kind of layman's?
So the original technology that was used for those first companies that entered was an array-based technology. That's also what's used for ancestral research. But as we go into the field of health, being able to look at the whole genome, not snips of it, but the whole gene, really transforms our ability to include more people and understand many more risks. And so for us, that's why we chose a subscription model. It really aligns our interests with the consumer. Ancestry Health Plus integrates a comprehensive family health history understanding with a comprehensive understanding of your genetic risks, looking at whole genes from next-generation sequencing, and there's just more and more clinically actionable insights that we can curate and deliver to consumers, and then there are many more omics to come that help us put consumers on an empowered path to preventative health.
That was Ancestry President and CEO Margot Georgiadis. Now joining us is Bloomberg's Max Chafkin. He also had an interesting story about the U.S. Chief Technology Officer and some controversial comments he made in Lisbon. So Max, what did we learn today from what that CTO said?
Yeah, this is Michael Kratsios, who became CTO in August. This was his first speech outside the U.S. It was in Portugal at the Web Summit. The audience here, what was sort of interesting is, well, a couple of things. Number one, he basically reamed China and Huawei. He urged Europeans to, basically stay as far away from these Chinese infrastructure partners as possible, which is something the U.S. has been saying for a long time. But it's kind of interesting is he also met with Margaret Vestager earlier in the day. That's what we reported, and he delivered the same message in person. So you're seeing the Trump administration, kind of reiterating this statement, even as they're, coming to some sort of trade deal with the Chinese government. The thing that was a little bit more interesting to me is that he also kind of picked up on something that Mark Zuckerberg brought up a couple of weeks ago, where he said, Europe, you need to be careful if you regulate these big technology companies. Now that means big American technology companies too much. That's going to create an opening for Chinese companies. That's going to create an opening for companies that maybe you are not going to like as much as you don't like Facebook, but how would you like it if instead of having to deal with Facebook, you were dealing with ByteDance? And he delivered this message to Vestager. Now Vestager also spoke at the Web Summit later in the day and was super critical of Facebook. So I think there is definitely a divide there in terms of how the U.S. sees these issues and how Europe does.
Well, Max, I like that you brought up Facebook because we heard a similar tune from Sheryl Sandberg, the COO, today at that Year Ahead event, where she said not only then are we dealing with Chinese data privacy, how we're able to censor free speech, but then we're also playing by their rules when they can turn over data to their government and any notice. How much of that as well is a bigger issue?
I mean, I think this is a big deal, both in terms of Facebook's business, because TikTok, that's the most significant competitor that Facebook has right now. It's not Twitter, despite the fact that the most significant competitor in the conversation might be Jack Dorsey. The real business competitor here for Facebook right now is TikTok, and Sheryl Sandberg is right, and some of these critics are right in that TikTok there have been reports now some of these reports are disputed, and there's some nuance of censorship, of basically a different point of view towards free speech, and I think that there is something to this critique of you don't like Facebook, how Facebook manages content, but you're really not going to like how a company that's kind of closely aligned with the Chinese government manages content. Now one issue here that maybe is tangential to this is the political ad issue, which is that Facebook came out and said we're okay with basically misinformation and political ads, and a lot of people, including some Facebook employees, have pushed back strongly on that. And I think Facebook, you may see some adjustments. They're probably not going to change the policy overall, but there's been a signaling of a willingness to maybe negotiate on targeting. So perhaps Facebook's not going to fact check political ads, but we're going to change the rules on who exactly you can target those ads to, or something along those lines.
Well, two great interviews and stories today. That was Bloomberg's Max Chafkin. Thank you for joining us. And coming up, a Saudi spy plot. It turns out two former Twitter employees may have been using the service to spy on users for the country. That's next. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology, and be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg. The U.S. government has charged two former Twitter employees with helping the Saudis spy on dissidents in Riyadh. A Saudi national also was charged. Only one of the three has been arrested, though the other two are not in the U.S. Prosecutors say the Saudis wired the former Twitter workers hundreds of thousands of dollars. Bloomberg Technology's Kurt Wagner joins us with the details. Give us the backstory on this.
Yeah, so the claim here is that these two employees were basically using their position inside the company to look up information on account holders. And as you probably know, on Twitter, you can be anonymous, so you can pretty much say anything you want on the service, and people won't necessarily know it's you. But if you're in the building and you have access to the emails or the phone numbers or the other types of personal information linked to those accounts, you might be able to place an identity to an account that, in this case, could have been critical of the Saudi royal family. How
much of this is two Twitter employees could have been going rogue versus Twitter not doing enough and Twitter being implicated in all of this, and they're eventually the ones maybe being held liable, if you could say
Sure.
that.
Well, I mean, this was a few years ago, and we're just kind of learning about it now. And it's, in my opinion, kind of a safe question to ask, or a fair question to ask. It's like, what did Twitter know at the time, and what should we have learned from them a couple years back? At the same time, it's a little bit unfair, perhaps, or maybe unrealistic to expect these companies that have thousands of employees globally to know what each and every one of them might be, doing in their personal life in terms of the relationships that they have. So certainly, I think it's an expectation that Twitter should be able to say, we know who has access to what information. It's a little bit tougher to know that they are necessarily going to take that information and treat it in the way that they should be treating it, both inside the company, but also when they go home at the end of the day.
Why aren't we doing a better job? Why aren't these tech companies doing a better job of verifying what employees have access to that key special data? And why isn't it only a select few?
I mean, that is a great question, and one that we've been asking kind of more and more over the last couple years, as Facebook in particular has dealt with a lot of data privacy issues. And part of the thing was that when these companies first started, they were building and they were growing at such a rate that the idea of kind of protecting and locking down that information was a secondary concern to building the products and adding more users. So the idea that these places were these were open work forces, and that people could go in and actually access this to build the necessary features was just part of working there. And only recently did we realize that might be a major problem.
Almost coincidentally, Evercore analysts came out today and cut the stock, in part because they have underinvested in R&D. This today sort of highlights the effect that they've underinvested in R&D, and now we're seeing it play out. Is that as part of the story as well?
I think that you can always criticize these companies for not doing enough on security, and so I think that that's probably a fair criticism, especially for Twitter. It seems a little bit coincidental, perhaps, that the news of these two rogue employees comes out at the same time. It's a little bit tough to say, hey, Twitter, if only you'd invested an extra $1 million, you would have stopped these spies from doing what they were doing. So I'm not sure if they're totally related, but I do think that a lot of these companies, and Facebook, again, I keep bringing them up, but they've talked about it the most, they're putting a ton of money into security of their users, and I think that the rest of the tech industry is probably going to have to follow suit.
Yeah, playing catch up. That was Bloomberg Technology's Kurt Wagner. Thank you for joining us. And coming up, Disney shares soaring after reporting fourth quarter earnings. The earnings call currently underway. Let's listen in to what Bob Iger had to say about Disney Plus. This is Bloomberg.
Now, we're still relatively small in terms of the scope of things, in terms of number of subscribers, but I think the best way for me to characterize it would be to say that we're enthusiastic about what we saw the consumer reaction to be. We certainly feel good about the product that's going into the marketplace next week, and we'll know a lot more in just a few days.
This is Bloomberg Technology Global Link, where we join Bloomberg Daybreak Australia to bring you the latest in global tech news. I'm Taylor Riggs in San Francisco with Kathleen Hayes in New York and Sophie Kamarudin in Hong Kong. Let's take a look at those top global tech stories that we are watching. Sophie?
Taylor, the board of Google parent Alphabet is investigating how the company handled claims of sexual harassment and misconduct against some of its executives. According to CNBC, the probe includes the behavior of Chief Legal Officer David Drummond. Plus, it's previously been reported that Google reportedly paid Android founder Andy Rubin $19 million in severance. He left the company over a relationship with another employee. Meanwhile, Google may change its policies on political advertising. It's considering the move in the midst of a raging public debate on the topic. It's not clear if Google will rule out campaign ads altogether. That's what Twitter just did. Now, Netflix is vowing to spend more on programming in the face of increased competition. The biggest streaming service already expects to spend $15 billion this year. That's more than any of its rivals. CEO Reed Hastings says Netflix is just getting started. He says the company has been strong in series. Now it's getting strong in movies. Those are the top global tech stories of the day. Kathleen?
Thank you so much. Disney shares are up in late trading after reporting fourth quarter earnings. The company cites strong box office performance of films like The Lion King and gains from theme parks. Key insight of the report, losses at the company's direct-to-consumer unit widened to $740 million. That's in part reflecting costs for the Disney Plus streaming service, which launches on Tuesday. Let's bring in MediaTek Porter Bibb for more. Porter Bibb, CEO, analyst, etc., and watcher of these big media companies for so many years. So, Porter, they had some good numbers at Disney, for sure.
Very good numbers, but it was the dominance at the box office that propped those numbers up.
So what does that mean moving ahead?
Well, the movie industry and the theatrical movie industry is not going to last more than 5 or 10 years as a viable business. But where Disney has positioned itself, it's going to be the dominant content producer, distributor, over the top and streaming going forward. And the market has finally caught up to Bob Iger and realized that Disney owns that space.
Yeah, so Porter, we could talk all about the earnings call and the earnings numbers, but frankly, here in San Francisco, no one cares. We just want to know about that Disney Plus TV.
Right.
What early numbers do you need to see to feel confident they can take on Netflix?
Well, they're going to lose money for at least 4 years, maybe a little longer. They're talking about by 2024, Bob Iger has said we'll have 50 million paid subscribers. The very smart thing that he did right away was price it at an irresistible level. And if you're a parent and you don't subscribe to Disney Plus, I think your kids will probably leave home. It's got so much recognizable and irresistible content. No one can touch the huge amount of library material that Bob Iger is making available for $12.99 a month.
A bargain. So
it's a real bargain, and he's thrown in ESPN and he's thrown in Hulu. So for that amount,
how can you go wrong?
You can't.
But so what kind of revenue, what kind of profit and positioning can this earn for Disney?
It will become the biggest profit spinner 4 or 5 years from now. But right now, it's going to lose money as it lost almost $1 billion last year just in the startups, and each year until it breaks even, it's going to lose several $1 billion. But that's development costs, and that's actually money well spent.
Porter, we are hearing on the earnings call from CEO Bob Iger, and he's coming out and saying that there is no floor in sight for cable subscriptions. How much of a headwind from cable subscriptions can be offset, frankly, from a rise in streaming?
Well, it isn't the cable subscribers that are the concern. It's the retransmission fees that are worth billions of dollars to Disney and the other content providers. Just on ABC alone, he's going to start to lose literally billions of dollars from retransmission because of the serious cable cord cutting that's been ongoing and is only going to accelerate.
So you're still very positive on the stock. Is this a stock you own? Is this a stock would you buy? And you're also you're positive on online betting.
We've been in and out of Disney, and I think that what's happened is that Disney has gone from a day trader's stock and a market-influenced, rumor-driven stock to being a value stock, and that's where the market is going to find a huge appreciation in investing in Disney over the long haul.
And as you said, it never hurts to have your brand, your logo, Mickey Mouse, and others known by so many children of all ages around the world.
Here's a little number that you ought to keep in mind. Disney has a PE today of 17 times. The only other media company that's of any comparable size and content quality is Comcast. They're also at 17 times. Netflix has a 92 PE. And that suggests that since they have announced that they're going to spend $15 billion this year and more next year, they're not going to make a profit. And at 92 times, somebody is going to pick them up.
Yeah, Porter Bibb of MediaTek Capital, thank you for joining us. Much more ahead is on Bloomberg. That's next. This is Bloomberg. With just under 1 year to go to the 2020 U.S. election, Facebook COO told Bloomberg News that things this time around won't be the same.
We think the 2020 election is a massive test for us. And it should be. You know, elections have changed. We've changed as a company. If you look back to 2016, of course we were prepared for state actors, but what they really did was hack in and take information. This new, more insidious, right, false stuff, we were totally unprepared. We never thought of it. We missed it. Everyone missed it. That's different now.
And speaking of being prepared for 2020, think of the following scenario. Deepfake videos, self-driving buses killing voters, chaos and confusion at the polls. That's what went down on Tuesday, but not in the actual U.S. elections. Rather, it was a simulation that pitted hackers and law enforcement officials against each other to see who would win when it comes to safeguarding an election. The event, dubbed Operation Blackout, was run by cybersecurity firm Cybereason. Joining us now in our electioneering series in Boston, Cybereason Chief Strategy Officer Roy Carmel, and in studio, Bloomberg Technology's cybersecurity reporter Kartikeya Mehrotra. Roy, let me start with you. What was the scenario behind this simulation?
Hi, Taylor. Thanks for having me on. Yeah, so the background for this, again, as you stated, is the vulnerability of elections, not just through hacking of the election system itself, and not just through social media, which are the sort of obvious things we like to think about, but looking at a broader scope of how does critical infrastructure actually can influence the mobility of voters, how can mayhem actually influence both the viability and credibility of the elections. And so what we've created is a simulation which is a fully immersive exercise of a red team that are hackers that are trying to disrupt the elections, and a blue team of defenders that are trying to respond and put together a strategy while innovating in real time as the simulation goes on.
And Kartikeya, as we take a look at how important these simulations are, it's because it really highlights our vulnerabilities. All week long in our electioneering series, we've been talking about our vulnerabilities. Where are we most vulnerable?
Well, as we've talked about, the U.S. election system is actually about 8,000 different counties at the local level trying to protect the integrity and security of the American election apparatus. And so the closer you get to the ground, to rural communities in swing states where IT support is perhaps minimal, and you have county clerks who spend most of their year issuing marriage licenses and zoning permits, to then ask them to protect the integrity of an election is quite a lot. And so that is probably where the greatest amount of attention and energy is necessary, and it's unclear if that's actually happening.
So Roy, we have Team Red and Team Blue. Team Red is the hackers. How did they perform? How well did they do in the simulation?
So the hackers team, which was a team from Cybereason as well as other consultants, put together a scenario of first of all, attacking critical infrastructure, acknowledging every single critical infrastructure is actually an election infrastructure. Attacking both autonomous vehicles as well as traffic lights, public transportations, and other means of critical infrastructure, power, gas, and others, to either demobilize specific segments of the cities that were identified as swaying into one side of the vote, and by that actually impacting the elections. The blue side, which consisted of Cybereason, FBI, Secret Service, Arlington Police Department, and other organizations, put together a defense strategy, trying to think as broad as possible, and then reacting in real time to the simulation. What this high intensity and immersive exercise made them do is start thinking beyond their traditional thought process, and then allowed them later on to sort of absorb what happened in the exercise and have some lessons learned so that they can prepare in peacetime towards the election day itself.
Kartikeya, how realistic do these scenarios sound? Some of them sound a little outlandish, but are they useful exercises in getting us to think about the different types of ways in which a disaster could occur?
I think absolutely. Any sort of exercise is a useful exercise at this point, because we don't know what sort of attack is waiting in some point in 2020, right? We know what occurred in 2016, that Russian hackers used sequence attacks to attack Illinois Illinois and used fishing expeditions to get into Florida, but we don't know what's waiting on the other side in 2020. So playing out as many scenarios as possible to prepare for attacks on 2020 is a good idea.
Roy, how do we switch from going to the defensive and protecting ourselves versus going on the offensive and getting out in front of this?
In a way, both things are tied together. We need to put together a strategy that puts ourselves, first of all, in the shoes of the attackers, understanding what are all the possibilities at hand to be able to attack the critical infrastructure that needs to be defended, and then taking some proactive actions, what we call threat hunting, in order to go and hunt for these threats before they actually get to the critical infrastructure. And what Cybereason is trying to do together in collaboration with those organizations is to enable them and teach them what threat hunting is all about and how to come together and collaborate so that the defensive strategy is cohesive.
Finally, Kartikay, what are our best tools? Is it improving auditors? Is it electronic and paper voting together? Is it using blockchain, which we talked about yesterday? What are our tools?
I think the paper trails that are being developed across the country would be the best tools. The trouble is that different election administrators and cybersecurity experts disagree on the best way to create that paper trail. In some places, ballot marking devices are being embraced where there's some semblance of a paper trail, but its credibility could be called into question. Other regions are depending on hand-marked paper ballots that you feed into a scanner to really create an auditable trail, so that if there is a hack, if there is an exploit, there's a way to actually tell if the intent of the voter is being reflected in the final results.
Roy Carmel of Cybereason and Bloomberg's Kartikay Mehrotra, thank you both for joining us. And still ahead, Peter Thiel's VC firm is being sued for $60 million by its former general counsel. We will hear from the plaintiff next. This is Bloomberg. The venture capital firm founded by billionaire Peter Thiel is being sued by its former top lawyer. It's Crystal McKellar, who was the general counsel at Mithril Capital, alleges that the company wrongfully terminated her and retaliated against her for calling out alleged wrongdoings at the company. She joins us now. Crystal, thank you for joining. Outline your claims for us.
Sure, thank you so much for having me. So I'm here because Ajay Royan, who's the founder of Mithril Capital, has been abusing the trust and the money of Mithril's investors. I initially tried to fix things from within, including by urging Mithril's largest investor, Peter Thiel, to use his power to shut down the fraud. That didn't work, and so then I went to the SEC, and then Mithril, of course, retaliated against me by smearing my name in the press, and also by filing 2 separate pretextual lawsuits against me in Delaware and in Texas, states where I've never worked, in a vain effort to intimidate me and to chill my cooperation with the government. As you can tell, it obviously hasn't worked. And the question of, well, what has he done? What has he done that needed to be reported? So Mithril raised a second fund 2 years ago and locked in massive annual management fees from its investors on the false pretense that Mithril was going to use those management fees to fund a large and working investment team, to find great tech companies to invest the capital. Instead, Ajay virtually eliminated the investment team, pocketed the management fees, and lied to investors about it.
So to be fair, I want to bring up the response we have from Mithril, a spokesperson, and I want to read it out loud here. This is the allegation in Ms. McKellar's complaint are false, as evidence in Mithril's lawsuit against her demonstrates, including documents embedded in the filing that reveal that she personally approved these fee disclosures and repeatedly stated that AJ had the highest integrity. They are confident that that will be proven in court. Do you have a response to that statement?
Well, the funny thing is the 2017 audited financials actually disclosed that full management fees were charged for 2017. And let's be clear about what the lie is about management fees. The lie is that Ajay was telling Fund 2 investors that he had waived 100% of the management fees charged to Fund 2 investors in 2017. I first witnessed Ajay tell this lie to Peter Thiel at his home in January of this year after Peter had accused Ajay of having broken Mithril through his greed. At the time, I spoke up and I told the truth, for which Ajay later accused me of disloyalty. And then I heard from a Fund 2 investor who reached out to me a few weeks later that Ajay was telling this same lie to other investors, that he'd reached out to her and he had told her that he wanted to remind her he had waived all of 2017 management fees, so that Fund 2 investors did not pay management fees for that entire year. That is false.
Some of the issues that are broadly going on in the VC world right now are high valuations, and the suit alleges that the higher valuations, were maybe too high. The problem is, valuation is what any investor says it is, because there's no public market for price discovery.
Sure.
So how do you go about proving that in court?
So I 100% agree that reasonable minds can differ as to what a reasonable valuation is for a private tech company. Reasonable minds can absolutely differ on that. However, when Ajay, when Peter, and when Paul Leggett, who was the managing director at Mithril, who served on the board and was very in touch with the day-to-day of this particular portfolio company at issue, when all three of them agree that that company is worth zero, it's probably worth zero.
So why didn't you name Peter Thiel in the suit?
So it's a great question. Now, Peter is not a partner or an officer at Mithril. He is a large investor at Mithril, and for a long time, he, just like Mithril's other investors, were being lied to by Ajay. Now, he eventually did learn the truth, and he did nothing. So I'm not accusing Peter of any actual wrongdoing. I would never suggest that Peter had lent himself to Ajay's fraud. However, I do disagree with the final action that he did take, which was to choose to do nothing. When I brought these concerns to him, when he learned of the fraud that was ongoing, he chose not to act. He chose not to exercise his power that could have shut down the fraud, and he was the only person who had the power to shut down that fraud, and that's why I went to the government.
So you were general counsel, you're a lawyer by trade, so you know how these things work.
I do.
What is your ideal outcome? Is it a settlement? Is it money? What do you want the outcome to be?
Well, the most immediate outcome that I'm looking for is for the government investigation to continue without further interference by Mithril. Beyond that, we'll see.
Okay. That was Crystal McKellar of Anthem Ventures. Thank you so much for joining us.
Thank you.
And finally, this hour, we get another look at Disney, which is reporting earnings on Thursday. Now, the media giant beat on both the top and the bottom line, and this comes amid a lot of anticipation for Disney streaming platform, which CEO Bob Iger talked up to on the call.
We're pleased to announce additional distribution partnerships with Amazon Fire, Samsung, and LG. Disney Plus will also be available in a bundle with ESPN Plus and ad-supported Hulu for $12.99 a month.
And with more details from the call is Bloomberg's Chris Palmieri in Los Angeles. Chris, your key takeaway from that earnings call?
Well, Disney's just always able to pull a rabbit out of a hat, or I guess a mouse in this case. Their earnings overall were down, but they beat Wall Street's expectations. And if you look at, some of the drivers in the past, ESPN profits were down. TV overall was down profit-wise. But once again, it's the film division just soaring, the theme parks, consumer products saving the day. And so, people are going to look at these numbers and cheer.
Chris, I want to talk about all the details of the earnings, but frankly, here in San Francisco, that we just want to know about the streaming numbers. What new information have we heard about Disney TV Plus streaming?
Lots of things. As you just saw there, they announced a bunch of partnership deals. Amazon's going to distribute it, Samsung devices, LG. That's key, especially with Amazon, is I think the second most popular, streaming device. So they're just making it very broadly appealing to a lot of people. Verizon customers, there's something like 19 million of them potentially who could get this new product free, which launches on Tuesday. So they're going out of their way to make it accessible to every possible consumer.
Chris, it was interesting that when we take a look at Disney's strategy, they're looking at spending $1 billion on new shows and films. They have, some of the old classics, but now they have to work on building out that new original content. Does Disney have the balance sheet and the capital to really do that?
They do, but this is one of the realities is that Disney's profits are going to be challenged. I mean, all of these new businesses don't start to show a profit until 2023, 24, 5 years from now. And in the meantime, they just said on the call the direct-to-consumer business was lost $740 million in the current last quarter. It's going to lose $800 million in the next quarter. So just ongoing billions and billions of dollars of losses as they pivot to this new media.
And Chris, finally, I do want to end on some of the other news outside of streaming, and that was parks and studios. And we are getting some headlines here about attendance there at the parks and the studios. Your key thoughts on that?
Well, this was a challenge. We reported earlier that Star Wars Land, the first one opened in California, attendance fell. Now they say, well, things aren't so bad. We raised our prices. People are coming. We are making money on the parks overall. And so that was good news. There, still got some headwinds. Hong Kong profits, the theme park profits, way down with the protests there.
Bloomberg's Chris Palmieri jumping over to save us after getting off of that earnings call. Thank you for joining us. And that does it for this edition of Bloomberg Technology. And Bloomberg Technology is live streaming on Twitter. Check us out at Technology. And be sure to follow our global breaking news network at TikTok on Twitter. This is Bloomberg.